Traders, Cousin Vinny coming to you from theclosingprint.com, June 12th, 2022. In this edition of your weekend video newsletter, we'll talk about the indices, all of which moved lower on a hot CPI report showing the highest inflation in more than 40 years, pushing stock prices sharply lower for the day and for the week. This CPI report, along with expectations for a more aggressive Fed, suggests that the downtrend will likely continue. We're looking for a little bounce this week, but there is high odds and probabilities that we'll move lower instead. As a result, all of our indicators for the most part are bearish, with 12 bearish, 5 neutral, and 3 bullish, as investors remain defensive, with 11 stock sectors losing ground on the week. Energy stocks held up better than most. That said, the week's biggest losers were financials and technology stocks, as Treasury bonds jumped to the highest level in nearly 4 years. With key support at 3,900 and then 3,800 below that, resistance at 4,100 and 4,200. Going into this OPEX, we are more cautious than usual. Given the hot CPI report, we remain in this descending channel with potential support down below at 3,800 if we lose 3,900 this week. We've got Fibonacci's, the 50% level highlighted with the shaded area, with RSI continuing to point lower. Strength of the trend is bearish. MACD is pointing lower. Tried to turn last week, but failed on Thursday, Friday, as distribution days continue to increase. Nasdaq reflects the same weakness. We are near that lower trend line and the 50% retracement, down over 30%, closing at the lows of the day and the week. With distribution days piling up, MACD still moving lower and RSI below 50. Small caps reflecting the same weakness, rejected at the 10 EMA on the weekly time frame. Momentum indicators in the lower panel continue to express a bearish sentiment. We do have a 50% retracement from the March 2020 low up to the 2021 high. That 50% retracement was tested 5 weeks ago, so we'll look for another test of that level. If we lose it, then the next level would be 618 and inside of the 2020 COVID rally as the next levels of support. The New York Stock Exchange also shows weakness, with the number of new lows outnumbering new highs. We're back below the zero line with a pretty decent stab lower, with 148 more new lows than we saw on Thursday to close the week, while advanced decline continues to drop. New York Stock Exchange looks like it's headed towards that lower trend line right around 14,400. VIX did stab higher on Friday after the CPI report. However, it did close in the middle of its range, so we're watching for a potential spike towards 33, 34 into the green zone, or a move lower to start the week as we trade into OPEX and a major VIX expiration on Wednesday, along with the Fed on Wednesday. Coupled together with the hot CPI report, many traders are expecting a more aggressive Fed, with short-term yields spiking the fastest, the 2s, the 5s, the 10s, and longer-term yields, the 20 and the 30, also accelerating to the upside as the Fed tries to curb inflation. Bond yields, particularly the 10-year, is testing that 2018 high near 3.25%. A close above that level would put the 10-year at the highest level in more than a decade, with the 2-year in the previous chart already climbing to the highest level in a decade in anticipation of the Fed raising short-term rates more aggressively to slow the pace of inflation. This is all cautionary for market participants to start the week. Crude oil is one of the biggest contributors to spiraling inflation at the current time. We show Brent crude having reached the highest level in 14 years, with RSI to some being overbought, so we'll look for RSI to start to drift lower. If crude oil does move lower, I'm thinking that crude oil will continue to move higher as a potential to test this 2008 high before retracing. Of course, the one caveat here is if for some reason the Democrats and Biden decides to backtrack on his stranglehold on the U.S. shale and oil production and exploration going into midterm elections in November. For you gold bugs, however, we did see gold and silver bounce, so there's a possibility we could see a follow through this week. Volume picked up dramatically on Friday as investors anticipate inflation continuing. Gold produced a nice bullish candle on Friday, so we'll look for any kind of follow through this week, along with the junior gold miners, GDX, GDXJ, in addition to silver, the silver miners ETF, which did produce a bullish engulfing candle on Friday. We'll look for that to follow through as well as a potential bullish trend develops with a higher low, with a higher high testing the 50-day moving average. Sectors also backed off a lot of red, especially in financials and tech last week, with most sectors moving lower. Energy fared the best, while international indices also backed off quite a bit, with the exception of China. Signals from the sectors consumer discretionary versus consumer staples, as this continues lower, that trend line is telling us to be more bearish and more cautionary. Once this starts to make higher highs and higher lows, which is a possibility, we could produce a higher low this week. If we start to see higher highs and higher lows, that would indicate institutions are starting to take defensive positions off and starting to look for a bounce in the indices. For now, we're bearish. With all of the sectors moving lower last week, we're looking for strength in energy. That's held up the best. Financials and technology fared the worst. There is a possibility of a bounce this week, but stay cautionary going into Monday trading and protect your profits, with all sectors closing lower last week. This week in the IBD 50, there's only a handful of stocks that are set up properly. Arch Coal looks pretty good. It's sitting on the 21-day moving average. Stochastics is rising. Those are the two things that I'm looking for. Price above a bullish 921 50-day or showing a potential reversal, candle, or formation with stochastics rising. In the energy sector, one of the stronger sectors, we also had DQ showing up on the list. Chinese solar, stochastics turning up, and price action consolidating for a week at 60, with most Chinese stocks highlighted last week showing relative strength. Alibaba, Bilibili, Baidu, IQ, Baozun, EDU Education, and TAL Education, among others. So check your favorite Chinese stocks. Those all look very strong last week. Some of the energy stocks like ConocoPhillips do have stochastics moving lower. Devon Energy, though, also having a surge in call buying as the company bought $865 million worth of acreage from Rimrock Oil and Gas in the Williston Basin. That's going to add to its accretive earnings, with no less than a half a dozen analysts upgrading their price targets on Devon Energy last week. Additional energy stocks like High Peak looks like it might follow through as well. Stochastics embedded, while Occidental Petroleum sees stochastics quickly getting oversold, so that we might get a bounce right near the 50-day. Keep an eye on Oxy. Also keep an eye on METC, Ramaco, giving potential for a follow-through this week, rising up along the 9 EMA, the 50-day, also starting to turn, the 21-day crossing through the 50-day, consolidated for several weeks along the 200-day. We got a volume by price support level as well, looking for a follow-through this week in METC. With volume increasing, institutions accumulating shares, we're looking for METC to follow through this week. Shockwave also showing up on the IBD 50, looking for a follow-through. Note the volume. Shockwave highlighted as RS line continues to climb, volume increasing. Sales look good. The company develops and commercializes products to transform the way calcified cardiovascular disease is treated. We can see a larger cup and a failure on the handle, but we did bounce near the lows of that February support zone. In addition, we had relative strength last week, higher highs and higher lows, looking for Shockwave to retest that level overhead at 223.15 as we start the week. Additional ideas from MarketSmith. We have 13 stocks near pivots, 36 stocks with recent breakouts. Relative strength line, blue dot, showed 177 stocks on Friday that were potentially about ready to break out. If we rank these by price percent change, these are some potential candidates as well. Another energy stock, fairly inexpensive, relative strength line climbing on the breakout. That's what the blue dot scan attempts to find. Stocks that are showing relative strength for potential breakouts. We have Evolution Petroleum also following through. Looks like we could break out above 8 this week. Relative strength line is at 97. Earnings look good. A 999% increase over the previous year. Last quarter, we had a nice beat. 4 cents versus 17 cents this quarter. In its most recent report in May. Nomad Royalty. Yamana Gold, along with many stocks from this group, looked very strong last week as gold caught a bid on Friday. So did silver and the gold miners, so maybe check those out as well. Additional stocks showing relative strength, EOG Resources from the energy group, following through last week. Relative strength line at new highs with a strong earnings increase of 89% in 2022. Hess with very similar price action, exploration and production, transportation and marketing of oil and gas worldwide. Also note its earnings. It reports again at the end of July. Note recent earnings, 82 cents in 2021 versus $1.30 in the most recent report on April 27th for a 15% earnings surprise. Pinduoduo and many Chinese stocks followed through last week. Relative strength line is climbing. Pinduoduo has earnings increasing in 2023. Many of these Chinese stocks look like they're going to break above the 50-day. Many have already. So check your favorite Chinese stocks. We'll probably see a follow through again this week as China eases rates. Additional stocks you might want to consider are in aerospace and defense. If you check the government's website, contracts each week are awarded. You can see Raytheon, Lockheed Martin, Northrop Grumman, and many others with awards that total in the millions and billions in some cases. So keep an eye on some of these aerospace and defense stocks. Most likely many of these are going to follow through and continue higher. Also check these stocks from the scans. Many of them are hedges if the markets continue to move lower, like TZA or SDOW. Just make sure you check out these additional names that look like they could follow through this week. Newmont Mining, Baxter International, Inigo Mining. All of these set up with potential follow through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, June the 12th, 2022. I'll send out a watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, get outside and enjoy the rest of your summer day. Take care, and we'll see you in the morning. Ciao.